Hi everyone, welcome back to Be Rich. I managed to pull Sashwath in today. One of you were commenting yesterday saying that in the video, Vinod, why are you always alone? Why aren't you giving other people a chance? You guys don't realize nobody else is here. Most days it's just me, sadly sitting alone, trying to get some information out to you guys. Anand is busy traveling. Sashwath is in college studying. And Kesar, sometimes he just disappears on me. So when no one else is there, I at least make sure that I come out here and I give you guys something. I'm sorry sometimes if I'm alone and it gets a little monotonous with my voice. I know I tend to be boring. My kids tell me all the time, Dad, you're very boring. So I do understand that. So without much delay, I thought I'll let Sashwath get into what he wants to talk about today.
Yeah, it's good to be back and good to be with you on video again. So, a lot of you messaged me on LinkedIn. Thank you. I do want to record more, but my finals have just gotten over, as I mentioned in my last video.
And big congratulations, you've done very well.
Thank you. And now I'm back to bring you guys some videos. So, the topic I wanted to talk about today was something contrary to what we've been touting on this channel. Cash is king. We've been saying cash is king for a while now. And I still think the statement holds its weight in gold. But a lot of people have come out and said, you know what, there are possible avenues now that the market is cracking and we see certain fault lines in the economy because of high interest rates. You know, people are saying, hey, maybe it makes sense for me to start piling up on stocks and, maybe bonds because interest rates are quite high. And, all that is correct. And we've always said that, just hold some T-bills in the US for 5% and you can just wait out this sort of volatile period to see basically what is going to be happening in the next coming 6-7 months. Because right now we're in the cusp of three possibilities. One, there's going to be a recession. Two, there's going to be resilience in the market. That is, demand stays consistent and the economy says, you know what, I don't care what the interest rate is at. We are going to spend and the economy is going to do great. And the third option is the one we hate the most for the country, and that's stagflation. Stagflation, for those of you who don't know, is a quick primer. When you have high interest rates, but also very low economic growth. So high interest rates because you need to clamp down on inflation, which is there because of supply side bottlenecks. We had this during COVID when we had the supply pull inflation, and because demand was at an all-time high and supply was limited because of COVID, we had a huge stagflationary period, and now we're sort of doing okay. So these are your three possibilities, and let's examine what you can do in each of these single possibilities. For those who don't want to sit on cash, for those of you who are saying, let me out onto the field, let me be a Virat Kohli or a KL Rahul and, whack the ball a few times, get a few singles between the pitch. So,
did you enjoy the match yesterday?
Oh, it was great. I had gone to the Australia versus India match. Amazing game. Shows you what patience looks like on the pitch. So
yes, I agree.
Yeah, sure. It's
felt like a real value investor match.
Yeah, felt like a real value investor match. Kohli, even though he's an amazing batsman, got only singles and doubles, max to max. And when he could get a double, he picked up a single and said, you know what, I'm okay. So that's how you're supposed to invest in according to us.
Our philosophy.
So let's move on to recessions. So this is probably the most likely scenario. We've seen this time and time again, inverted yield curve, blah, 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 so many other reasons. High interest rates, demand is going to clamp down. When there's a recession, you have a possibility where you can basically pick up bonds. Bonds do really well when there's a recession. They have done very well. Data points towards that. Because think about this. In the US, if you're able to invest in a 10-year treasury bill for 4.5% yield, if there's a recession, then the Fed will have to take their foot off the accelerator and they'll have to bring down rates a little bit so that they ensure that you don't go into a real recessionary period. Because once they've fought inflation, they're happy to bring down interest rates. So if there is a recession and the Fed decides to cut rates by even 1%, you are going to make a return of about 10 or 12% on your bond just through a 1% cut in interest rates. That's very possible. It's very possible that we have a recession in the US and Powell says, you know what, I've done my job, let's cut down interest rates. Very possible. And you're going to have a 12% increase. And suppose it's a really nasty recession and Powell has to cut interest rates by 2%. then you're looking at about a 25% gain on your bond portfolio.
Yes.
Just like that, magic. So you have a 25% gain in your bond portfolio with a 2% cut in interest rates if there's a nasty recession. This may be one strategy for people who believe there to be a recession coming about, for those who don't want to sit on cash. The second possibility is if there's resilience. If the market is saying, you know what, things are great, our demand is going to keep chugging along, then Powell is going to say, no, I'm going to increase rates if possible or keep rates at where they are. Even then, cash may not be king because you have certain aspects of the market which are already corrected. Like our market is correcting, and in the US, small cap are trading at much lower than their all-time average. So the long-term average, they're trading well below that. So suppose demand does show to be resilient, all assets will do well and stocks will do better than cash. That has been the trend throughout the decades we've seen the market, and it will continue being the trend because stocks are on the higher plane of the risk to return line. If you plot the return and risk of certain assets, stocks have always been higher than cash and bonds. So if everything is going to do well, stocks will do much better than cash. So that's your second aspect. Third aspect, okay, there might be stagflation. If there's stagflation, we know stocks have done badly because of high inflation and poor economic growth. Stocks are not going to do good. Interest rates are going to be high, so bonds aren't going to be doing too good. So now what? Now you don't have an argument, cash is king. No, there's another aspect which we're forgetting, commodity prices. Because there's a supply bottleneck, you can invest in commodity stocks which are trading in commodities such as Tata Steel. Tata Steel did really well with the steel boom. And timber stocks in the US which produce timber, that's a great avenue to invest in because we saw in 2022, timber prices went up by about 10 or 15% when the benchmark index went down by 5% or 10%. So this may be a wonderful way for you to invest during stagflation. That being said, why do we keep talking about cash? We keep talking about cash because you don't know which one of these three outcomes are going to come about. It's very nice for us to sit here and tell you that, if this happens, then you should do this, that happens, you should do that. But do we really know what's going to happen? We have no clue.
None of us are astrologers.
Exactly. And the real value which cash offers is that when you don't know which option is going to be the right one, just sit and wait. Once the things become a little more clearer, you can go ahead and continue with that aspect. We're not saying sit on cash all the time. We're not those kind of people. We're saying sit on cash until you know what's going to happen. Right now, we don't know whether demand is going to continue staying resilient or whether we're going to have a recession. So the soft landing versus your hard landing scenario. Because as we see things going right now, it's very hard to tell. We're sitting on the fence. And if you want to sit on the fence, cash is your best option to sit on the fence while raking in 5% per year. It's a wonderful place to be. What do you think?
I completely agree with what you're saying. And if you see someone like Warren and Charlie, they're also sitting on a lot of cash. Most people who are big investors are sitting on cash because the simple reason is correction is going to come. There is no doubt about it. Which kind of correction, we're not clear on because that is how the world works. Nobody can predict the future, but we are very lopsided. For that reason alone, the correction has to come. How severe it's going to be, no one knows. So there's always no rush. You have done the effort of sitting on the cash. I know you're itching to do something with the cash. That is the best time to just switch off your portfolio monitors, switch off all this news and go do something else for a while.
Yes.
So allow time to play out because it's like Virat playing yesterday. You have to take your ones and twos.
Yes.
And you should not get frustrated. The first thing he did when he came in was he went and had a flash for it. Luckily for him and India, he did not get out.
Stoinis dropped the catch.
Yes. Then he wised up after almost losing his wicket. He calmed down and he started doing the ones and twos and rotating the strike and let Rahul play his game out and he just slowed down.
Then he flashed his bat and then got caught.
Correct. Again, he wanted to finish it and go in a flurry, reach his century and be like, ha, I did it. And that's when he got out.
Yeah.
This is true with cash too. Cash is very nice when it's sitting in your account and it looks very pretty when you keep logging on and you see those numbers there.
Yes.
And let's say you're in a bit of a rush and like, oh, young Virat, you go flash at it and that cash can become zero and you're sitting on an asset which will take time to recover. Maybe you put it wisely in an asset and that asset suddenly corrects right after you move in.
Yes.
It's going to take time to recover. And during the time of recovery, sitting on your hands and watching it recover will be very, very painful.
Yes.
And please remember what Nassim Taleb said. We are fooled by randomness. We think we are very smart. We think we are doing things, and you are not. You are doing things because of the whole world being very random.
Yes.
Market movements are random. No one could have predicted what Hamas would do. Even the Israelis, with all their intelligence, the lesson learning for all of us as humanity is Israelis with the top intelligence, with eyes on a small strip of land, like the strip of Gaza strip is so minute compared to Israel and the rest of the world. And they had so many eyes, and every single kind of eavesdropping was happening there, surveillance was happening there, and they could not see this coming. This was their biggest strike on them since the Yom Kippur War, which was 50 years ago. So that's how this has been a wake-up call for Israel. And if that could happen to a country with so much awareness, trust me, you and me sitting here with a bit of cash in our pocket thinking we know what is going to happen, we're very foolish if we think so.
And getting the 5% yield in dollar returns on your money is like getting those ones and twos. I'd even venture to say that it's like getting a wide plus a two. It's a 5% return on your cash is a tremendous return, especially when you're clamping down on inflation.
Correct. And you have time.
Yes.
Please realize, if a 90-year-old man thinks he has time and he's sitting on cash, I think us who are less than 40, 35 or like Sashwath in their 20s can definitely think you have some time.
And we're not saying don't invest. We're saying SIP.
Yes.
SIP as much as you want.
Yes.
But don't go into thinking it's a lump sum opportunity. Chill out. Wait for your opportunity. Keep some money aside. Let it get some interest. Let it gain some interest. Compound your money and wait for that perfect opportunity for you to swoop in.
And I see a lot of you in Instagram, even now, reaching out to me and asking me for advice on investment. First of all, we are not investment advisors. This is just purely out of our own experience and knowledge.
We're sharing it with you.
Yes, educational purpose, and it's a hobby we're sharing with you guys.
Yes.
Please don't misconstrue all our information thinking we are advisors. We are not.
Yes.
Please talk to advisors and get a good advice for yourself.
Yes.
And me and Sashwath are always long-term players. We never look at 2-year horizon. We don't even look at 5-year horizon. The minimum horizons we look at anything is 10 years. So if you're looking for someone to tell you what to do for 2 years, we're the wrong people. You're tuning into the wrong channel. It's like coming to a dosa restaurant and ordering a hamburger and wondering what happened. So please understand this.
If high-powered finance is like Israel, then we're like Ivory Coast sitting somewhere else, knowing not what we're doing.
Correct.
We have no clue what's happening.
Yeah, so don't ask us for 2-year horizons. Don't ask us, should I buy this, hold on to this. It's completely up to you. And what is even more alarming is, in this current situation, in the current environment with no job security and the question of a looming recession, people are eager to take on loans, that too huge home loans.
Bad idea.
Please don't do this. There's no necessity right now to build your house, especially if you're Sashwath's age. There's no time to buy, there's not the right time to buy a piece of land.
There's more than enough time.
Or borrow money and start building a house on that land. Please don't do it. You can wait for a few years. I'm not saying you never can do it.
Yeah.
I'm just saying, hang on, brother, for 2 or 3 years. Let this storm pass. Like all cyclones, it will come in rapidly and it will blow out. If you have studied, if you saw that LinkedIn post which I had put about the hubris the world was going through 2007, right before the crash of 2008, 2009, you'd understand what I'm saying. It just took 2 years for
everything to get wiped out.
Yeah. And then rebuilding did come. And we slowly rebuilt and we came out of it. Same way, something will happen, you'll get wiped out. You don't want to be holding the short straw. And trust me, the last thing you want is a half-built house on a piece of land you don't own completely as yet, and you've lost your job and you have no way to pay the EMI, and you come from a very poor background. And there is no financial net, no inheritance. Your parents don't have any inheritance. Yes, your parents will always want to live their dreams through you. They'll be leaning on you hard, saying, no, you must buy house. No, you must buy land. Who are you listening to? You listen to us. We are your parents.
They come from a different generation.
Yes, they come from a different generation. The loan is in your name.
Yes.
You are responsible for the loan.
Yes.
End of the day, it's like that. If Virat was listening to everyone in the stadium last night, telling him how to play each shot, Virat would have got out in the first ball because he wouldn't have even got down to batting anything.
Funnily enough, Maxwell sledged KL Rahul in order to tempt him to go for a six so that they could catch it immediately.
Correct.
And KL Rahul just kept getting the singles.
Yeah.
And every dot ball, the crowd clapped for him. Not because, dot ball is seen as if a failure on the batsman's part, but it's defensive playing. KL Rahul was playing to win. He wasn't playing to be flashy. He wasn't trying to be a hero. He was trying to be a hero in the sense that he's playing defensively.
And it's great to see Indian team have that kind of maturity at this young age and the beginning of the tournament, the first game of the tournament. So that shows the commitment from the team trying to win the World Cup this time. Same way, I would like all of you guys to show commitment to your own financial prudence and apply your mind and apply patience and take your time before you do anything.
It's like that song Patience by Guns N' Roses.
Correct. Those of you who do listen to Guns N' Roses will know what we're talking about.
Yeah.
Anyway, I hope you found this video informative and entertaining, and I will try and pull Sashwath in as much as I can now that he has finished his exams. If he's in Chennai, he will be in the studio. If he's back in Bangalore for his holidays, we'll do it remotely.
Yes.
Thank you again for joining us on Be Rich today.
Thank you.
It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.